Yo, what is going on, y'all? Jay Trades here, back in a brand new video. And in today's video, I'll be going over where to set your stop losses, as well as where to set your take profits, and in general, just trade management. So without further ado, let's get started. So first off, obviously you want to enter a trade, right? So everyone has different trading styles. So me personally, I trade off zones and some complex concepts that I'm not going to get into in today's video. Those concepts will be included probably in my course that I will release later on. But as of right now, I'm just going to go over where to set your stop losses and how to set take profits so you manage risk properly in the trade. So let's just pick one of the trades I took on oil, for example. This works with any stock essentially, or any indice, commodity, any market basically. And of course, now before you even decide where to set your stop loss and where to take profits, you want to make sure you understand the market, right? You want to make sure you understand the pair or what market you're looking at. For example, I know forex is usually more volatile in general, especially specific pairs tend to move around what certain times. You want to know all this information, right? So for me, I know oil is probably one of the most volatile things you could trade in the forex market. One of the most volatile commodities behind gold, or above gold. I would say it's more volatile than gold. So I would say you want to keep that in mind before you set or take profits, so you know typically how far it can go, right? Give one example here. So this is one of the trades I took. I took basically 4 or 5 winning straight trades on oil, which is insane, but this is one of the trades I took on oil, right? So over here, I'm not gonna get into trade depth and why I took the trade, but I will say my take profit was way too, I could have got a lot more profits, is what I'm saying. As you guys can see, I was targeting a 1-to-3 ratio, which is honestly really good. But for oil, you can definitely target a lot higher ratio. Okay, of course, it depends on where you enter. As you can see, I could have got, double the reward essentially. But, again, but if so, what happened? That already happened. It's too late. So just going to go over that real quick. So first, number one, you want to understand the market that you're trading. All right. How much it moves, things like that. Does it usually like to give volatility? Does it usually like to get liquidity? Things like that. Number two, for stop losses, right? Let's say I enter, so let's take this trade for example, right? I took this trade right here. I entered right here at 72.248. In terms of stop losses, you want to put your stop loss right above where the move started, right? So for me, of course, the move, you could say it originally started up here, but again, this is at 7 a.m. You want to keep track of time, right? Time is super important when you're trading. You want to see what time the move started and when volatility picks up, right? So as you guys can see, I basically entered here at this double top right here. But if you did enter earlier, you could have, let's say you entered here, right? Or even back here. You want to set your stop loss above the start of the move, kind of. So of course, basically this comes with instincts and just experience in terms of knowing where the move actually starts. Again, yes, it starts up here, but I know for a fact that once it get down here, this move is very unlikely to get all the way back up here again. Very unlikely. It's most likely going to stay under this area because, again, this is also somewhat of a key area, as you guys can see, which I would later get into. But anyway, point is you want to set your stop loss above, one keyword above where the move started, right? You don't want to set your stop loss, let's say you entered here, move start up here. You don't want to set your stop loss at the move, because what happens is you guys can see liquidity grabs happen. This is when there's unfulfilled orders that are pushing down the market right here at this area. You see these big wicks? This is called liquidity grab. Now, people can name it whatever. I'm just going to call it liquidity in this situation. There's tons of wicks all the time, everywhere. Not all of them are liquidity grabs, but for this instance, I'm going to call this a liquidity grab, right? So you always want to set your stop loss a good amount above, right? You don't want to set it too close to this area, because what happens is it could wick really fast and boom, it hits your stop loss. Look what happens. It goes the complete opposite way immediately. So you always want to make sure your stop loss is somewhat higher, right? That's a super key concept. Now, of course, you want to set a little bit higher. Depending on how volatile the pair you're trading will depend on where you set your stop loss in comparison to the highs or lows, depending on if you're going long or short. So I know how oil trades, so I just set my stop loss, a few ticks above like that. That's a really good stop loss. You also want to take in factor of spreads and not commissions, but just spreads in general when you're trading, right? With different brokers have different spreads, different pricing. So you want to make sure your stop loss is a good amount above, right? You want to make sure you don't get stopped out before it goes your way. Otherwise, that would be a big L trade. So as you guys can see on this trade, it went in my favor and then boom, it went back up, right? And if my stop loss was at the high exactly, I would have got stopped out. I would have missed this whole move right here. But because my stop loss was a bit higher, you know, it didn't trigger my stop loss, I'm chilling. Make sure to control your psychology when you're in a trade. You want to chill, all right? You don't want to think about any other things. Oh, it's over, it's wraps. That's how they mess you up when trading. That's how the market makers mess you up. You want to make sure staying calm, stick to your plan, right? I stuck to my plan. Boom, it hit take profit 1. So my take profit 1, I believe, was this area right here, this general area right here. So take profit 1 is about a 1-to-1 risk reward ratio. My final take profit was a 1-to-2 here, basically right here. Of course, it moved a little bit more down, as you guys can see, but honestly, again, that's not something I can really predict, and I'm completely fine with honestly missing out on a few pips. It's whatever, it's all good, you know what I'm saying? Still a great risk reward ratio nonetheless. So this is a great trade, right? So in terms of take profits, I would say set your take profits on a higher level time frame, not too high, right? You want to make sure we're day trading here. We're day traders. We don't want to look at 4-hour, daily, weekly levels. You want to look at levels that are valid and make sense. That's price is gonna go to, right? So for example, let's take this trade for example right here. All right. So this trade right here, really good risk reward ratio, excellent trade I took right here. Man, 156% is insane, but nonetheless, right here again, stop loss above where the move typically happen. So right here, as you see, this is like a level I was looking at right here. So as you can see, it would hit this level multiple times. So I wanted my stop loss above there. I could have moved it above, honestly, these 2 points right here. That probably would have been a smarter stop loss, but nonetheless, I didn't want to risk too much on this trade as I was already green for the day. But for this trade, essentially for take profits, you want to look at key levels, right? So I would go and start on a 30-minute level. 30 minutes, like one of my favorite time frames to use. Go on 30-minute. I want to find key levels where price is reacting strongly to, or not. It doesn't even have to be strongly, but just somewhat violently, right? As you guys can see right here, boom, this level, you see 1 touch, 2 touches. It touched 1 time, it reversed immediately. Strong level. Right here, tons of price action going on. Big reversals. Eventually it breaks. Over here, same level here. Look what happened. Pretty strong reject, I would say right here, right? Pretty strong reject. And then of course it later broke, but pretty good reject, right? You want to look at like times and what action price moved on the left side, right? Key level, key level, key level, key level. Great key level to take profits at, all right? So I would set my take profit 1 here. I'll usually like to set alert, so I'll make alert. And when my alert goes off, I take profits. Of course, I'm still monitoring like my trade. I'm not leaving the computer or anything, but it has an effect which just helps me to know, okay, take profit 1's hit. You can name this TP1. Say TP1. Message, do whatever you want. TP1. All right. So it's guys, let's see how much was that. That TP1's about 1-to-2. That's a really good take profit 1 risk reward. Usually, I would say take profits, depending on the commodity or whatever you're trading again, are typically 1-to-1. For oil, many times you get a 1-to-2 for take profit 1. Again, you want to understand the market you're trading, right? So I know how oil moves, this and that. So therefore, take profit 1 was here. Take profit 2, I would have set it like around here, right? This area right here, as you can see, it's super strong reject right here. This basically was the start of the move that pushed everything up, right? And as you can see, again, it's touched this level multiple times. Super strong rejection, rejection, rejection. This means this level is a super key level of interest, meaning depending on how price reacts there, it can have a really big reversals, right? So I don't want to get stuck in a reversal like this, for example. So my second take profit was back here. So, you know, that was honestly a 1-to-4, 1-to-5 risk reward, take profit 2. Excellent trade here. I stopped here. I did not want to take the full move here. It was a little risky. You know, I could have left runners, but I decided to just cut it fully there. You know, I was satisfied with the profits. So that's essentially how you set your take profits. Set alerts there, find key levels, and for stop losses, basically put them above where the move initially started, taking into consideration of what time you're looking at. All right. So that's going to be it for today's video. It's going to be a quick and short video on how you manage your trades, things like that. Again, you want to make sure you have a plan before you get into every single trade. You want to make sure psychology is straight, and yeah, just stick to your plan, and that's all you need. Over a long time run, if you backtest properly, you will know you will be profitable over a long run. You can have bad days. Everyone has bad days, right? So you want to make sure to stick to your plan and execute day by day, and that's how you become a profitable trader. So I want to thank you guys so much for watching. If you guys did enjoy, make sure to leave a like, subscribe, do all that.